Hello viewers, welcome to my channel. I'm Hasham Ali Khan. This is the third video on the topic decision analysis in the subject financial decision making tool. Already two videos I have completed on the theory regarding this decision analysis. The first video I have explained you about CVP analysis and break-even analysis. The second video I have explained you all the concepts used in break-even analysis like contribution, PV ratio, break-even point, margin of safety, etc. Now this is the third video in which I'm going to explain you about the classification of cost. The total cost will not serve the purpose of the management. The management purpose is to control the cost. And without classifying the cost, without understanding the nature of the cost, the management cannot be able to control the cost. So that's why it is very much necessary. A student must know what are the different types of cost in examination. They will ask you, frequently they will ask you, what do you mean by opportunity cost? What do you mean by sunk cost? What is shutdown cost? What is replacement cost? These are the different costs which are frequently asked in examination. So in this video, I'm going to explain you all the different types of cost. So if you want the perfect knowledge, watch all the videos from beginning till end. And I told you earlier, theory is very, very important. In examination, don't depend only on solving the problem. You must know the meaning of different concepts which are used in this topic. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject Financial Decision Making 2, select the videos of decision analysis. Then you come to this video. So before explaining the classification of cost, take the screenshot of the points which I have written on the board. Then I'll explain all the different types of cost in detail. Now, classification of cost. There are various criteria on which the cost will be classified. The important basis or the criteria of classification of cost are as follows. The first one, natural classification. According to the elements of cost, we can classify the cost into material cost, labor cost, and overheads. In every manufacturing organization, material is used. The material is the first element of cost. Next comes labor. The labor employed in converting the material into finished goods. Then overheads, the common cost which is incurred on all the products. So in this way, according to natural classification, the costs are divided into material cost, labor cost, and overhead. Next comes behavioral classification. This behavioral classification is also called classification on the basis of variability. Means the cost will change according to the level of output. There are some costs which will remain fixed, whatever be the level of output, whether we make 10,000 units or 20,000 units or 30,000 units, whatever be the level of activity, the cost will remain same. So this is one of the nature of cost, fixed cost. Second comes variable cost. The cost which varies according to the level of output, or the cost which proportionally change accordingly to the output. Example, if the output increased by 10%, variable cost will also increase by 10%. If the output decreased by 5%, variable cost will also decrease by 5%. This type of cost which varies according to the level of activity, that is called variable cost. Semi-variable cost is partly fixed, partly variable. To some extent it will remain fixed, later on it will become variable. So in this way, the cost can be classified as fixed cost, variable cost, and semi-variable cost according to behavior. Third one is by traceability. By tracing the cost, where the cost is incurred, on the basis of traceability, the cost can be classified as direct cost and indirect cost. Direct cost is the cost which is specifically incurred on the particular product. Specifically incurred on the particular product, and the cost which can be identified in a particular product, that is called direct cost. Indirect cost, the cost which is commonly incurred on all the products produced, not specifically incurred on a particular product, but it is incurred on all the products. That common cost is called indirect cost. Next one is according to controllability. According to controllability, the cost can be classified as controllable and non-controllable, uncontrollable. Controllable cost means the cost which can be controlled by a decision of the management. By taking a decision, the management can be able to control the cost. Example, the material cost is a controllable cost. By taking suitable action, the total cost of material can be reduced. Whereas uncontrollable cost is that cost, once the cost is incurred, it cannot be changed by any decision of the management. Next comes classification as per financial accounting. In financial accounting, the expenditure or cost can be classified as revenue expenditure and capital expenditure. Revenue expenditure means the expenditure which is recurring in nature. The expenditure whose benefit will accrue to the business only for 1 year. That means this year we have incurred expenditure, only this year we'll get the benefit. So this type of recurring expenditure, day-to-day expenditure, is called revenue expenditure. Whereas capital expenditure means the expenditure incurred only once, but the benefit will accrue for a long period of time. The earning capacity of the business will increase by incurring capital expenditure. Example, machinery purchased, building purchased, furniture purchased, plant set up. These are called capital expenditure. Expenditure incurred only once, but the benefit for a long period. Next comes normality. According to normality, we can classify the cost as normal cost and abnormal cost. The normal cost means the cost which is incurred in the day-to-day operations. That means every now and then the cost is regularly incurred, that is called normal cost. Example, salary paid, rent paid, telephone bill, purchase of material. All these costs are recurring in nature, normal in the ordinary course of activities. Whereas abnormal cost is a cost which is incurred only once, non-recurring. Example, all of a sudden there was a breakdown of machinery. There is a breakdown of machinery, all of a sudden. It's a non-recurring cost. It's an abnormal cost. Next comes according to functions. According to functions, the cost can be classified as production cost, purchase cost, marketing cost, selling cost, administration cost, etc. There are different functions in a business organization. Production department is a department which converts the raw material into finished goods. The cost incurred in production department is called production cost. Administration department is concerned with the controlling of all the activities. So cost incurred in administration department is called administrative cost. Similarly, selling and distribution activity. The department selling and distribution is concerned with advertisement, promoting the sale. That means increasing or stimulating the sales. The expenditure incurred in that is called selling and distribution cost. In this way, the cost will be classified according to functions. Next comes time of ascertainment of cost. When we are recording the cost, if we are recording the cost after incurring the cost, it is called historical cost. First we incur the cost, then we record the cost. So after paying the cost, then we are recording the cost is called historical cost or past costing. Similarly, predetermined cost. The cost which is recorded before incurring the cost. For example, next year we are going to incur so and so expenditure. So this year itself we are recording. That means next year we are going to incur this much expenditure is called predetermined cost. Cost made in advance, that is called predetermined cost. So these are the formal method of classifying the cost. But this is not the only method of classification. Apart from that, there are many other methods of classifying the cost. Apart from the above, there are many type of costs that do not fit into formal classification. Nevertheless, they are very useful in cost analysis and are used by management for decision making. So apart from this formal classification, the other methods are also important to the management for taking decision. So what are the other methods of classifying the cost? Some of those costs are like this. First one, conversion cost. Conversion cost is the cost incurred in order to convert the raw material into finished goods. So all the cost of finished goods except raw material cost is called conversion cost. The total cost of production minus material cost is called conversion cost. So in simple words, we can say like this: conversion cost is the total cost incurred in converting the raw material into finished goods. It is a total cost excluding material cost. That's it. Next comes differential cost. The differential cost means the change in the cost due to a decision made by the management. The management has taken a decision due to which the cost changed. If the management has not taken any decision, there is no change in cost. So the change in cost due to decision taken by the management is called differential cost. Now this differential cost may be incremental or decremental. If the cost increased due to the decision made by the management, then it is called incremental cost. If the total cost decreased due to the decision taken by the management, it is called decremental cost. Next comes marginal cost. The change in total cost when the output is increased or decreased by 1 unit. When the total output is increased by 1 unit, whatever is the change in total cost is called marginal cost. Similarly, if the total output is decreased by 1 unit, what is the change in cost? That is called marginal cost, right? So marginal cost, normally it is a variable cost because the fixed cost will not change when we change the output by 1 unit. The fixed cost will remain same. So normally marginal cost means variable cost. Next comes notional cost. The notional cost are the hypothetical cost, imaginary cost. It is called imputed cost. The cost which is recorded but actually it is not incurred. It is not incurred, it is not paid, but we are recording the cost on hypothetical basis, on imaginary basis. That is called notional cost. Example, the salary of the owner, proprietor. The proprietor is working in the business. We are saying that salary is paid to the proprietor. Actually, salary will not be paid. He is the owner, he is getting the profit of the business. So when salary is paid to the owner, or notional rent, rent paid on own premises. Rent will be paid only when it is rented, when it is let out. But when rent is charged for own premises, it is not the rent paid. Simply we are providing for rent. That is called notional cost. It's a hypothetical cost that is entered in cost account to represent a benefit enjoyed, although no actual cost are incurred. They are also called imputed cost. Next comes, so very important cost from examination point of view. Now concentrate here. Opportunity cost. Opportunity cost. It refers to the advantage in measurable terms which has been foregone on account of not using the facilities in the manner originally planned. That means the benefit foregone in measurable terms by not utilizing the facilities which are there for our benefit. There are some facilities which we are not using. That means the benefit foregone by not using that facilities is called opportunity cost. The concept will be more clear if I give one example. So here the example is, for example, if an old building is proposed to be utilized for housing a new project plant. If a building is constructed for the purpose of letting out so that we can be able to get the rent, but the same building we are utilizing for our own housing plant, for our business. For our business we are using the building. Otherwise, actually we have made the building, constructed the building for let out. That means if we use the building, then we are foregoing the rent. We are not going to get the rent because we are not letting out. We are using the building for our own purpose. Then is called which the building could fetch if rented out is an opportunity cost. That means the rent foregone by not giving the building on rent. The rent foregone by not giving the building on rent but using the building for our own business. So this rent foregone is an opportunity cost. Should be taken into account. This opportunity cost should be taken into account in order to evaluate the profitability of the project. Our project is to set up the plant in our own building. So we want to evaluate whether it is beneficial or not to set up the plant in our own building. In that case, we should take into account the opportunity cost of using the building. Otherwise, we would have given on rent and we would have got the rent. We are foregoing the rent because we want to run our own business. That is called opportunity cost. Next, out-of-pocket cost. There are two types of cost, notional cost and out-of-pocket cost. Notional cost is called imputed cost and out-of-pocket cost is called explicit cost. What is this out-of-pocket cost? The cost incurred by paying the cash. The cost incurred by paying the cash is called out-of-pocket cost. Example, salary paid, rent paid, telephone bill, electricity bill, all these are the payment in cash. These are called out-of-pocket cost. Replacement cost. The cost incurred in order to replace the existing asset with a new asset. For example, our machine has become old. Now we want to sell off this old machine and purchase a new machine. So we will fetch some amount by selling the old machine and we have to pay to purchase a new machine. The replacement cost is the cost of replacing an old asset with a new asset. Next comes shutdown cost. Very, very important. Very frequently in examination, this question will be asked about what is shutdown cost. The cost incurred when the plant is temporarily shut down due to some reasons. In some organizations, the business, the plant has to be shut down for a short period of time on temporary basis. But when the plant is shut down, when the business is closed, there are some expenditure to be incurred. Fixed cost will be there which is to be incurred even if the plant is shut down. Those costs which will be incurred even when the plant is shut down is called shutdown cost. So here they represent all such costs that will continue to be incurred even if the plant is temporarily shut down. If the plant is temporarily shut down, even then the cost has to be incurred. That cost is called shutdown. Example, a manufacturer or an organization rendering service. Then any organization, whether the organization is a manufacturing organization or rendering the service organization, they have to suspend its operation for a period on account of some temporary difficulties. Sometimes the organization is confronted with some difficulties like material shortage, power shortage or labor shortage. These things will arise, these difficulties will arise, due to which the plant has to be temporarily shut down. Example are given, shortage of raw material, non-availability of labor. During this period, no work is done, yet a certain fixed costs have to be incurred. During this period, no sales are conducted, no business activity is done, but still some cost, some fixed cost will be incurred, and such fixed costs are called shutdown cost. Now, last type of cost I am going to explain in this video is sunk cost. Sunk cost is a past cost. The cost which is incurred in the past, and that cost cannot be changed by any decision now. Management cannot take any decision to change the cost because the cost is already incurred in the past. That is called sunk cost. And very frequent in examination, this concept will be asked. What is sunk cost? So three costs I am stressing. That opportunity cost, shutdown cost and sunk cost. These costs are frequently asked. So these are the costs that have already been incurred and hence are not relevant for decision making. So sunk cost, already incurred cost in the past. Now for decision making purpose it is irrelevant because the management cannot change it. Already it is incurred in the past. Sunk costs are also called historical cost or past cost. The cost which is incurred in the past or historical. These are the costs which have been created by decision that was made in the past, that cannot be changed by any decision that will be made in future. This cost had already been incurred by taking a decision in the past. Already in past we have taken the decision, we have incurred the cost, now we cannot do anything in future. Now investment in plant and machinery building are example of such cost. Example, machine was purchased, building was purchased, payment was made in the past. Now we cannot do anything, already incurred in the past. Next one is such cost cannot be altered by later decision, they are irrelevant for decision making purpose. Already incurred in the past, now nothing can be done. We cannot do anything regarding the sunk cost. The cost is called irrelevant cost because we cannot change it. We cannot take any decision to change the cost. That is called sunk cost. So in this video, I have explained you about the classification of cost, the formal classification and also the classification required by the management. So this video is very important because theory question, these concepts will be asked. So if you are satisfied with my lecture, give a like to the video. Share my channel among your group, among your friend circles so that more students can watch the video and enhance the knowledge. Give your comments. Subscribe if you have not yet subscribed. And by the super thanks which is given below my video, inshallah we will continue the next topic in the next video.